Last Friday, the U.S. official employment report showed that non-farm employment increased by 339,000 in May, far exceeding the expected increase of 180,000 and 294,000 in April. The unemployment rate rose from 3.4% to 3.7%. Following the release of the optimistic employment report, the US dollar strengthened against other major currencies. The US dollar index rebounded to 104.03. Euro USD declined by 56 pips to 1.0706. French data indicated that industrial production increased by 0.8% on a monthly basis in April, surpassing the expected growth of 0.5%. USD Yen experienced a rebound of 116 pips, reaching 139.96. Great Britain Pound USD Dollar decreased by 74 pips to 1.2452, while Australian Dollar USD Dollar gained 37 pips, reaching 0.6608. USD CHF increased by 35 pips to 0.9090, while USD CAD decreased by 24 pips, reaching 1.3425. And the Bitcoin rose to $27,200. The US debt ceiling crisis temporarily comes to a close. On May 31st, the US House of Representatives passed a bill regarding the federal government debt ceiling and budget. The following day, it was also approved by the Senate. According to the bill, government spending will be constrained by the debt ceiling until the end of 2024, thus avoiding a debt default. According to data from the Congressional Budget Office, the current size of the U.S. federal debt is approximately $31.46 trillion, accounting for over 120% of its GDP. Generally, the proportion of outstanding national debt to GDP does not exceed 60%, which is equivalent to a debt burden of $94,000 per American citizen. Currently, mainstream asset classes have shown a relatively subdued response to the U.S. debt crisis. The focus of the U.S. Treasury Department's work now is to find buyers to U.S. bonds, with three important points to consider. First, whether the Federal Reserve, which is still in a balance sheet reduction cycle, will adjust its monetary policy to halt the sale of U.S. bonds. Second, whether trade surplus countries led by China will purchase U.S. bonds. And third, whether ordinary households in the United States may emerge as a force in buying U.S. bonds. From June 3rd to 4th, OPEC and non-OPEC oil-producing countries held a meeting in Vienna. After difficult negotiations, major oil-producing countries reached an agreement to cut production. The statement released after the meeting stated that the production cuts agreed upon by the OPEC and non-OPEC countries in 2023 will continue until the end of the year. Starting from January 1st, 2024 until December 31st, 2024, the daily crude oil production of OPEC and non-OPEC countries will be adjusted to 40.463 million barrels, a reduction of approximately 1.4 million barrels compared to the current production level. Crude oil jumped to $74.3 per barrel during early trading hours, but gradually declined after that, and currently stands at $72.5 per barrel. This week, the focus will be on the Reserve Bank of Australia's cash rate decisions on Tuesday. After pausing rate hikes in April, the Reserve Bank unexpectedly raised interest rates by 25 basis points to 3.85% on May 2nd, reaching a new high since 2012. So far, there is little evidence to suggest that the inflation rate will fall within the Reserve Bank of Australia target range of 2% to 3% in the short term. Reserve Bank Governor recently stated before Parliament, "We have a lot of work to do in that regard." However, despite active expectations of future rate hikes, 21 out of 32 analysts, nearly two-thirds, predict that the Reserve Bank of Australia will keep the official cash rate unchanged at 3.85% on the 6th of June. Among major local banks, Commonwealth Bank of Australia, National Australia Bank, and Westpac Banking Corporation expect the Reserve Bank to pause rate hikes, while ANZ Bank anticipates a 25 basis points increase. In a survey conducted from the 29th of May to 2nd of June, 10 banks also predicted a 25 basis point rate hike by the Reserve Bank of Australia this week. Rate futures prices indicate a probability of around one-third for the rate hike on 6th of June. Thursday we'll see the release of the US initial jobless claim data, followed by the Canadian unemployment rate on Friday.